All right. Can you guys hear me?
You-
Awesome. All right. So today we're going to start our new course. So instead of doing one-on-ones and everybody all over the place and not getting information that's vital, we're going to take a step back and we're going to start with complete basics, not even options, but just trading in general. And then we're going to work our way up. Okay. So if you guys see my screen here, I'll just kind of give you the next 14 days how it's going to look. So class one would be our onboarding and platform setup. I think everybody is already inside of the Discord, so we don't really have to go too much in depth there. Okay. The next thing, which is going to be today's class, we're going to go into is going to be market basics deep dive. This is going to go over market structure, okay? All the trading hours, pre-market, normal session, all those things, London high, London low, those things that we talk about, asset classes, equities, options, futures, forex, commodities, and just crypto as well. Okay. We're also going to talk about what are contracts. We're going to talk about symbols, things like that, the PDT rule. And then we're also going to go into orders. A lot of you guys keep asking, what are OCO orders, what are limit orders, what are market orders. Okay, so we're going to get into all of that, understanding liquidity, also understanding what the spread is, bid and ask, and then we're going to go into more examples and things like that. So that's kind of how this course is going to get structured. And then tomorrow we're going to go into actually helping you pick a brokerage account and then open up a paper trading account. Okay. So that's what we'll go into tomorrow. And then the day after that, Wednesday, we're going to go into candlesticks, things like that. After that, we'll go into market structure and trend. And then we're going to start handing out homework to everybody here. Okay. You're not allowed to move on to the next class unless you've already completed the homework. So you guys are going to get like a day to do your homework. And then we'll go into supply demand. And then we're actually going to start journaling and seeing how you guys are trading with paper accounts. Everyone's going to connect their account into my TradeZella, which we will pay for, and you guys will be able to see your guys how you guys are performing, all those things. Once that is done with shares, then we transition into options. Okay. Then we talk about what are options, all the Greeks, things like that. And then, next week, you guys will also start learning some strategies and things like that. So this course is going to pretty much cover everything you need to know from complete, beginner basic, psychology, risk management. All of these classes are going to be anywhere from an hour all the way up to 2, 3 hours. Okay. So I recommend grabbing a pen and pencil and then we can go ahead and get started. Okay. So, I would ask Daisy. So, kind of jumping in here. Okay, I have a few people joining, so I'm going to give them a second. Jumping in here to the first thing we have to talk about. Okay, is what is trading? That should be your first question before you even think about hitting the buy or sell. Okay, the first question you should always be asking is what is trading? Okay. Now, this is not a simple question to answer by any means or anything like that because trading, okay, there's multiple different types of trading. Okay. What you guys hear and see us trade are stocks and options. Okay. But in general, trading is pretty much just us betting that a company is going to do better or less. Okay. Because we're in a hypothetical fair market economy, we're allowed to trade these publicly traded companies. Okay. Whether it be a company, it can be an asset, it can be a commodity. I don't know if you guys know this, but you can also trade wheat, corn, all of those things. Okay. So it's just a big, think of it as just a Walmart and you're allowed to sell your product in it. Okay. And depending on what I think or you think is fair, we're allowed to say, this is what I want to pay for the product. And we can either make a profit by selling it back to someone or vice versa. Okay. So, first thing, kind of to get us started, is let's talk about the market in general. Okay. Whenever you're trading, you are exchanging money between two different people. Okay. There's always going to be a buyer and there's always going to be a seller. Okay. The biggest question that we got asked throughout the whole EDU and teaching people is what happens if somebody doesn't buy my order? Okay. This is where a broker comes in. So just to show you kind of how trading works in general, okay, there's going to always be a buyer, there's always going to be a seller, and there's going to be a broker. So whenever you guys place your orders, what ends up happening is whether you're buying or selling, your orders get routed to the exchange, okay? Whether it be NYSE, right? whether it be CME, whatever exchange you trade off of. Okay, it can be the Nasdaq, it can be CME, it can be SIBO. Any of these exchanges you're not going to see unless you use a broker like Interactive Brokers. But what happens is you're always going with a middleman, and this middleman's job is to make sure your order gets filled, whether he sells it to somebody else or they buy it for themselves. Okay, so the broker kind of regulates this depending on what broker you decide to go with. That's kind of your choice. Okay, now let's talk about the asset classes. Okay, this is where we talk about multiple different types of trading. Okay, there is equities. Okay, equities trading are stocks. Okay, so the main types of trading that we do, like I said, were stocks and options. Okay, equities fall into stocks. Okay, any company you guys see, Apple, Amazon, those things are called equities. Okay, the second thing we have that follow equities are options. Now, these are two different types of markets. Okay, options are just a way for you to trade equities, but they are the most complex in all of finance. Okay. And, depending on where you are in your trading career and stuff like that, you guys have seen how options get affected. Okay. Options is also one of the most riskiest. Okay. The second thing, or actually the third thing, are futures. Okay. Futures right here. Okay. Futures are things like ES. Okay. NQ. You guys hear Milan Satya always talking about, they're trading futures. Futures are just a bigger version of something like the SPY or the NASDAQ. Okay, you can also trade, things, commodities and stuff like that, which we'll go into in a minute. But futures are open much longer than equities and options are. Okay, equities and options are open from 9:30 a.m. to 4 p.m. Okay. Futures are opened 26 or not 26, sorry. Let me remove that right here. 24, 23 hours a day. Okay. And sorry, 6 days a week. Okay. They open at, I believe they open at 6 p.m. on Sunday and they go all the way up to Friday. Okay. And then we have things like, that you guys have probably seen, which are Forex. Okay. Forex is you trading the dollar, the yen, things like that. Okay. This is where most of the scams and stuff like that happens. I don't know if you guys have looked into Forex trading, but that's where a lot of scams happen because it is not regulated for the most part. Okay. Any questions there by anyone? Okay. And then we have commodities. Okay. Commodities are things like wheat, corn. Okay. This is also something that you can trade. I have no experience whatsoever trading. Okay. I have traded Forex before. I know how Forex works. I have never traded commodities. Okay. There's people that make a lot of money on it. But the reason I show you guys this is options might not work for you. Okay. I know this is a main options and equities course, but options might not work for you, but then futures might. Okay. There's people in this group that I started teaching them options and they transitioned to futures and they're doing extremely well. There's people that I've taught futures to, they've done really well in the Forex market. Okay. There's people that have learned equities that do really well in options. There's people that learn options that don't do well in with equities. Okay. So the reason I go through these is because one of these might not work for you, or even all three might not work for you, but one is going to work. Okay. And it's your job kind of to find what works for you. Futures, you get to use prop firms. Options, you have to put in your own money. Equities, you need a lot of cash to trade with. Forex, the market's not regulated. Okay. So they all have their pros and cons. Okay. Does anybody have questions there? Okay. Now let's kind of talk about the sizes and the symbols and stuff like that. Whenever you see a stock, for example, let's just talk about Amazon. Okay. Whenever we look at Amazon, okay, you guys see, whenever you look up on your broker, you guys see AMZN. Okay. This is Amazon. This right here is called our ticker symbol. Okay. So whenever we're trading, especially on voice chat, you will usually see us refer to AMZN or something like we'll still call it Amazon, but this is the ticker. Okay. Every stock has a difference. Some stocks have weird tickers. For example, if we look at MicroStrategies, theirs is MU, right? If we look at Tesla, it's TSLA. Okay. This once again is called our ticker symbol. This is how you can see the stocks. Okay. Whenever we look into futures, okay, we refer to these, as ES or MES. Okay. Futures, ES is the main one, MES is the micro. Okay. So ES for every 1 point, okay. So 1 point equals 10 cents on SPY on average. By the way, this changes because of this thing. I believe it's called carried interest. Okay. It changes all around, but for the most part, 1 point is 10 cents on SPY. So whenever there's a 10-point move on ES, okay, that means that is a $1 move on SPY. Okay, so whenever you guys see me sharing the order flow charts and stuff like that, just be sure you know that 10 points equals $1 on SPY. Now, once again, this is not 100% accurate. It goes up and down a few cents, throughout the day and stuff like that, depending on the carried interest. Okay, 1 point on ES equals $50. Okay, meaning that if this thing moves, oops, let me let this person in, meaning that if ES moves a full dollar, okay, which is once again 10 points, 10 points, right, on ES equals $1 on SPY. Okay, we're not going to do the math on the carried interest. Then that means that we would make, with 100 shares, we would make $100. But on ES, right, because it's $50 times 10 points, it would be $500. Okay. So this is just the reference that you want to go off of. So whenever we're looking at ES and we say there's a 10-point move, then it's going to move $1 on SPY on average. Okay. So if you want to take this note real quick, I'll give you a second. Okay. Mhm. So those are the main things. And then there are lots. Okay. Lots. A lot of people that trade international call, contracts and stuff like that lots. Okay. Lots, there's a very complex formula for lots. Okay. Lots we use for Forex. We don't really use that for anything else. We mainly use it just for Forex trading. We don't use it for options, equities, nothing like that. Even though on average, if somebody you hear call something a lot, it usually means either 100 shares or one contract. Okay. And then we also need to talk about contracts. Okay. Whenever we talk about contracts, that's for options. Okay. So once again, contracts are for options. So whenever you hear us say one con just refers to contract. It's just a shorter way of saying contract. Okay. This is only for options. We don't call cons for anything else. No other asset class do we call anything a contract. Okay. So those are the main differences between the asset classes. Does anybody have any questions? Okay. And then we're going to go into one of the most fun and interesting things, which are orders. Okay.
Prasant, may I ask one question? It might be
Yes.
too early. Uh, in up, if we buy the any share of, let's say, assume the 100 shares from Apple, we need a huge money and we don't have that one or any somehow reason, and go to the option be-
Correct.
because there is more leverage and less money but high risks. And why we need to go to the future? What's the benefit or what's the merits and demerits compared to the option and stocks? Can you go a little?
Great question. Awesome question, Dave. So, yes. So I'll just use ES as an example. Okay. So what are the pros and cons of each asset class? Okay. We're going to put pros here. We're going to put cons over here. Okay. Let's talk about equities first. Okay. What are the pros of equities? Okay. You own them. Okay. This is the biggest pro with equities. What I mean by you own them is you don't have to sell it at any time. You can hold this thing 10 years, 20 years. You can hold it for 2 seconds. Okay. The con, just like you said, is you need a lot of capital. Okay. The other pro with equities is easier risk management. Okay. And the reason for that is because if a stock is at $100 and you say your stop loss to 99, okay, then it's very easy for you to do the math. It's not like options where you have to look at the delta, you have to look at theta, you have to look at all these different metrics. Okay. Those are the biggest pros. The biggest con is it costs you a lot of money. Okay. That's for equities. Now let's look at options. Okay. The pros of options, the biggest pro is leverage. Okay. But the con of that is they are very high risk. Okay. So you're always trading one thing for another, right? With options, we get a lot of leverage. We don't have to put up as much money. The con is they are really risky. They are more complex as well. Okay. And the other pro with options that a lot of people don't see is oops, you can you can hedge. Okay. Now, this is a term we will go on to whenever we get into risk management, but you can also hedge your positions really, really well using options. Okay. I always go into this. The reason they're called options is because they unlock a lot of options for you. Okay. I know it's corny, but it is the truth. Okay. So those are options. Then we look into futures. Okay. Futures, the biggest thing with futures that gives you a pro, okay, is you get tax benefits. Okay. What I mean by this is with futures, you're not taxed as much on short term. Okay. So lower short term tax. Okay. You get taxed if you hold it for a long time. So it's complete opposite. So you get tax advantages trading futures. Okay. The con with futures are you can lose a lot of money. Okay. The reason for this is there's this thing called a PDT rule. Okay. Pattern day trading. Pattern day trading means that you need to have $25,000 in your account minimum. Okay. To be able to have unlimited day trades. As soon as you fall under, you either have to deposit more money or you have to switch to what we call a cash account. Okay. A cash account lets you trade as much as you want. Okay. There's no PDT rule. You can trade with $500 if you want. But the problem is once you run out of cash for the day, you have to wait till the next trading day. Okay. With futures, you have to have margins on. Okay. So this is going to go over here. Okay. You have to have margins to trade futures. There's no way around it. But there is no PDT rule, which means that you can, long as most brokers have a minimum, okay, Ninja Trader has a, I believe, $500 minimum, or it's either 500 or 750 per ES contract. But if you deposit that, then you get unlimited day trades with futures. Okay. And the risk management is much easier as well. They're extremely, extremely liquid. Okay. So now we're talking about futures. Any questions on futures there? Okay. And then there's the Forex market. Oh, and one more thing about futures is you also don't have to use any of your money whatsoever. Okay. There's prop firms and stuff like that. That's a huge pro as well. Forex. Okay. The pros, once again, prop firms. Okay. The way a prop firm works, in case you guys don't know, okay, there's a evaluation phase where you have to make X amount of money. For example, let's say we do a 100K account. Okay. If you do a $100,000 account, it will cost you, let's just say $100. Okay? So hypothetically, you get to control $100,000. The max money you can lose is whatever you paid for the account. You never owe them money. Okay? So the most money you can lose is this $100. Okay? That's with Forex and that's with futures. Okay? There's them called prop firms. So once you pass the evaluation account, so let's say that you paid $100 and you have a $100,000 account. Now you have to make $6,000 on that account. Okay. If you make $6,000, then you move on to a live account. Once you're on the live account, whatever you make for the, I'm using general terms, but you usually end up keeping anywhere from 70 to 80% of all the money that you make. Okay. So for some of you that don't have a lot of money, futures might be a great option. Okay. Or Forex. Why? Because you don't have to put up any of your money. Okay. But once again, you also have to think, how do these people make money if they're only charging you $100 for a $100,000 account? Because they have these things called rules. Okay. You have to follow rules. They're very, very tight to make sure that you lose money. For example, if you're trading on the $6,000 account, your drawdown, okay, which means how much you can lose per day, is going to be probably $2,000 to $3,000. If you lose any more than that, you have to pay the $100 again to reactivate your account. Okay. And then there's also consistency. You have to have consistent green days for you to be able to get it. Okay. So all of these things go into prop firms. The con with Forex is there's a lot of scams. Okay. They're not regulated. Okay. Like we talked about before, unlike the US where every broker has to be verified, go through the SEC, here, anybody can open up a prop firm account or open up a broker and say that it's theirs and start running it, and they don't have to pay you out if they don't want to. Okay. Any questions there about the different asset classes? Once again, we teach trading in general. Some of you guys might have a lot of success with futures. Okay. It doesn't hurt to try them, but the biggest thing is once you focus on practicing one, don't change it. Okay. You don't want to trade options one week, say that it didn't work for you, go to futures and then go to equities and then go to Forex. Okay. Pick one and get really, really good at it. I'm not even going to go into crypto trading. Okay. That's one thing I will not cover just because I'm not a big believer in trading crypto. I've seen people do it, people made a lot of money, but it's not my area of expertise to teach you. Okay. And then we have the order mechanics, which is what we're going to go into next. A lot of you guys don't get filled. A lot of you guys have struggle getting into a trade, getting out sometimes, okay? Because you're not understanding the types of orders, okay? The first type of order we're going to go over is a market order, okay? You guys heard this 1,000 times. We usually do market orders whenever we're scalping, okay? Scalping means we're buying in seconds, we're selling in seconds, okay? The thing with market orders are immediate, okay? That means that you get fast fills, okay? They are immediate. Okay. So if you have to get into a trade really fast or get out, market orders are the one for you. The problem with market orders is they fill you on whatever is the highest price. Okay. So the cost goes up. Okay. Per order, you're going to end up paying a little bit more. Okay. Because your execution is guaranteed, but there is this thing called slippage. Okay. Slippage means if the stock is at $200, if you do a market order, you might get filled at $200.30. Okay, but you're saying you're comfortable with them filling you at that price, but you're doing that because you're getting filled very fast. Okay, any questions about market orders? Okay, the second type of order that you guys see us always talk about are limit orders. Limit orders. Okay, limit orders are saying that you want to buy at a certain price. Okay. So for example, whenever I'm trading a limit order, I'm saying, okay, I'll pay $300 or $3 for this contract. I'm not paying any more. So if price hypothetically goes to, $3.01, I'm not going to get filled because it's already above. Or if I say fill me in at $2.99, right? Whatever I place this at, if it doesn't hit that point, even if we look at a stock example, if the stock is at 200 and I put a limit for 201, if the stock doesn't hit 201, I will never get into this trade. Okay? The reason we do limit orders is because we want better fills whenever we get in and out. Okay? A lot of the times, if you learn how to trade with limit orders, you're going to have a lot more success than market orders because your entries are going to be much, much, much better. But once again, there's always a con, right? You won't always get filled with limit orders. So if you have to get into a position or you have to get out really fast, limit orders are not for you. Okay? And then we have stop orders. Okay? Stop orders. They become a market order once they are hit. Okay? Okay. What this means is, let's say, I'll just go over a quick example. Let's say the stock is at $200 right now. Okay. Let's say that I put in a stop, which means my stop loss. Okay. I put in a stop for 199. Okay. This order is just going to stay there. It's not going to sell immediately, but as soon as price comes to 199, it's automatically going to take me out of my order, no matter what. Okay. So this is a way to protect yourself for the downside. Okay. Any questions about orders? Okay. And then there's this thing called GTC. Okay. This is good till canceled. Okay. So whenever you guys are swing trading, okay, you aren't going to want to place a stop loss every single day. Okay. So whenever you want to swing a trade and you want to set a stop loss, you will set a GTC order or a good till canceled order. Okay. Whenever you're day trading, you don't have to place this. Whenever you're day trading, you can just do a day order. Okay. But whenever we are swing trading, typically we will do a GTC order. Okay. So those are kind of the different order types. Once again, if you want to get in really fast, you want to do a market order. If you want to get in at a certain price or you don't want to pay as much, you will do a limit. And whenever you're setting a stop loss, you will do a stop order. Okay. Or a stop limit order. Okay. We're not going to go into FOK and LOC, but these things right here also pay attention to. Any questions there? Okay. Day orders cancel by end of day. And just so you know, a GTC order will not go through if the market is not open.
मलाई एउटा क्वेसन छ भाइ।
Yes.
हो यो जिटिसी अर्डर मैले थिङ्कर सिममा त्यो भेटाउन सकिने एउटा कुरा त्यो त
That's,
अर्कै कुरा भइहाल्यो। त्यसले ग्याप डाउन ग्याप अप हुन्छ नि, जस्तै हामीले स्विङको लागि
that's it.
ट्रेड राखेको हुन्छौँ, वेलले चाहिँ लाइक नाइट टाइमको लागि पनि काम गरोस् अन्टिल वी क्यान्सल भनेर राखेको। डज इट वर्क एट द नाइट लाइक ग्याप अप ग्याप डाउन अर
No.
इट
So
आउट?
once again, GTC orders good till cancel will not go through if the market is not open. Bonnie Basidi, let's say that you bought a contract for $1 at the close. Let's say you set a stop loss for 80 cents. I know. Let's say bullion market comes down, it gaps down, and now the contracts are worth 60 cents.
Yes.
Your order will not execute because it's not at this level.
Then what is the use of putting that on?
Because if I buy a stock Monday, and I think, for example,
Uh-huh.
this is for more sophisticated examples. Whenever you're buying multiple different stock, you don't want to have to go every single day and set a stop loss.
Oh, okay.
I know. So when you do a GTC, you set it and you just leave it. You don't have to do anything. Yeah, I know. And the idea is if a market ranges and it goes between 2 points, the stop loss it shouldn't hit hypothetically. And I thought once again, the times you use a GTC order will be extremely, extremely rare. But once again, we're going over from the basics, so I'm just covering this so you guys know what it is whenever you do see it. Okay. Then we have to talk about our spread.
Okay, thank you.
Yes. Okay. And if you guys have questions, just unmute and start asking. Let's talk about spread. Okay. A spread is the difference between your bid and your ask. Okay? Remember, a passive buyer, okay, wants to pay less, okay? Meaning that bid is cheap. Okay, because if you're buying something, you always want to buy it for cheap. Okay, so if you're buying at the bid, means that you're trying to place and buy an order for much less than what the market order is. For example, if a stock's at $100, your bid price might be 99.90. Okay, that might be the bid side. Okay, and the ask, okay, is your passive seller. Okay, which means that they want more. Okay, which means expensive. Because if you follow the market theory, okay, if you're buying something, you want to pay less for it, right? If you're selling something, which is that side, then hypothetically you want to sell it for more than how much you bought it for, okay? So the bid, you're always buying cheaper, the ask, you're always buying more expensive. Whenever you guys are trading and you want the best fills possible, you want to flip this around and you want to buy at the ask, okay, and sell at the bid. Okay, so if you guys want to take notes real quick, you want to buy at the ask and you want to sell at the bid for your best fill. Okay, but once again, going back to this, the difference between our bid and ask, okay, is called our spread. Okay, now we're also going to go into liquidity in a minute, but let's talk about spread. Depending on what instrument you're trading, okay, you're either going to have a very tight or very wide spread. What is a tight spread? If we look at SPY, okay, once again, can somebody tell me what this is called? What is this thing called right here whenever I dumb it down? Okay, what is this called right here? I just pointed at SPY. Okay, what is SPY? Can somebody tell me? Okay, which one of these asset classes is SPY? Somebody unmute and tell me.
Options.
That's the S&P 500.
Options.
Yes.
Equity for future.
Is it a ETF?
Okay, so it's an ETF, but it is a equity. Whoever said equity, right answer. Okay, SPY is an equity. It is not an option. Okay, SPY contracts are options. Okay, and it is not future. Okay, the future would be ES on SPY. Okay, but let's take a look at an example of a spread. Let's say right now, SPY is at $600. Okay, this is my bid. Let's say my ask is at 600.42. Okay, so this is my bid, this is my ask. Okay, the difference, so if you do 600 minus 600.42, you're gonna get 0.42. Okay, so our spread is 42 cents on this trade, which means that if I do a market order, I will get filled at this price. Okay, if I do a limit order at 600, I might get filled, but more than likely I will not get filled because it is at the bid, right? We're trying to pay too little. If I place it in between here, okay, and I try to buy a limit order, okay, let's say we do a limit order here. Right between these two prices, I have a 50% chance of getting filled. If I buy straight at the ask, because I'm paying so much, I'm going to get filled straight away. Okay, so the difference between these two prices, whether it be an option contract, once again, if we do a $3 bid and we do a $4 ask, okay, well, somebody tell me what is our spread. Samir, you're not allowed to talk. What is our spread? Anybody can unmute and talk.
42 cents.
For this right here, Didi, what is our
Yes.
spread?
That's the $1.
Yes, whoever said $1.
Sorry. Oh, I was
Yeah.
looking
So that
dollar.
is a $1 spread. Okay. Why is this important? Okay. For you to understand why a spread is so important, we have to take a look at a hypothetical situation. Any stock, okay, and we're also going to start talking about liquidity now, right? We have to, for us to figure out why this is important, we have to talk about liquidity, okay? What is liquidity? Okay, What is it? Okay. Liquidity is how fast money can flow through something. Okay. The best example is if you buy a house. Okay. And I want somebody to answer this. If I buy a house, is it liquid or is it illiquid? Can somebody tell me and tell me why? Okay. Anybody. I want
It's
somebody.
not it's not liquid, it's illiquid because it takes time for the whole process for you to sell the house,
Yes, thank you,
technically.
Parag. Yes. So a house is very illiquid because it's a whole process. It's going to take you a while to sell that house, right? But when we look at trading, okay, we can buy or sell a stock at any time. And usually the reason for that is liquidity. Liquidity means if I send an order out to the exchange, okay, and somebody buys it right away, that means it's very liquid. Okay. In the other way, if a stock has a wide bid and ask, okay, wide spread equals not very liquid. Okay. So liquidity is just how fast money flows through something. Okay. So if we have a wide spread, meaning that if my spread, I'll just use shares as for an example, if my spread is $110 to 114, I might get in here or I might get in here if I place a market order. More than likely, I'm going to get in here. Okay. That means that if somebody was to buy this at the bid, they would already be up $4 more than I would. Okay. The problem this creates is when you start buying a lot of shares, this is just $4 here. But if you multiply this by 100, now we're losing $400. Do you guys see that? This is why we don't trade wide spreads because they're not very liquid. Okay? And you might say, well, why also, the other reason, why is it also, why is the spread so wide? Is I guess the best example to give is the way these people make money, right? We also have to talk about our broker. Okay? Our broker needs to make money. You're trading on Robinhood and you think you're trading for free, you're not. Okay? Sorry to break it to you. If you're trading on Webull, you're not trading for free. If you trade on Thinkorswim, you're not trading for free. Okay. Yes, you pay no commissions, but they take money out somewhere else. Okay. By making your spreads wider. Okay. This is why I condone people not to trade on those brokers because you are going to have a wider spread. Meaning that, yes, on one or two contracts, it's really not going to affect you much, right? It might affect you $5, $10. But when you start scaling up and you start trading 20, 10, 50, 100 contracts, you're going to lose $1. Okay. If you do 100 contracts, you're losing out $100 or 100 shares, right? That's why we always look for tight spreads. Okay. What is a tight spread, right? There's no right answer to this, but for the most part, generally, we like to say a tight spread is anywhere from 1 cent to 30 cents. Okay. This is a tight spread. And you can make this number whatever you want. There's no right answer here. Some people think a 10 cents is a tight spread. Okay. If we're trading 1 cent to 30 cents, I really don't mind losing that. But when we're getting into, a few dollars spread, right? If you go and look at a stock that people don't trade a lot, okay? And the bigger the stock is, the bigger their spreads are going to be. Okay? Because guess what? A lot of people can't afford them. Okay. So, any questions on your spreads, your bid and ask, order types, or liquidity concepts?
Yes, sir.
Yes, go ahead.
यो एक्स र मार्केट प्राइस लगभग उस्तै हुन्छ त त्यही मार्केट बाई अर सेल नगरेर एक्स र बिट गर्नुमा फरक के पर्छ त किनकि मार्केट अर्डर र आस्कको अर्डर लगभग लगभग उस्तै हुन्छ त
Yes. So, it is almost the same. But once again, you have a chance, a tiny bit more chance getting filled better at the bid or the ask compared to a market order because a market order is going to fill you at the highest price that you allow it. And you're pretty much telling the market maker, fill me in at any price. I don't care. Get me in this trade. Okay? The only time that is beneficial to you is if you're scalping. If you're day trading, you don't need to do a market order. If you are swing trading, you should definitely not be doing a market order. Okay. But if you're scalping, you have to do market order because you're not going to be able to get in fast enough most of the time.
Mhm. Okay, thank you.
Okay, once again, great question. Now let's start talking about retail traders and their impact on price action. Okay, sorry to break it to you, but your 25,000, 100,000, $1 million accounts aren't making a difference. Okay, retail, okay, accounts for 10 to 20% of the trading volume. Some, statistics say it's higher, some say it's lower, but that's just a general idea. Okay, the money that we're trading, all of us together, not just this group, but the whole entire world, we don't even amount to 30, 40, 50% of the markets. Okay. We're not controlling big money. Okay. Your stop loss theory, everybody thinks, people are going to, the banks are hitting your stop loss. They're not. Okay. And this is also where we start talking about these other things. Okay. Us retail traders do not move the market. Unless you have 20, 30, $100 million, you're not doing anything for any of these markets. Okay, especially the Forex market. Okay, the Forex market is the biggest in the world because it's international. Futures comes out a close second, equities, and then options. Okay, but Forex is number one. You're definitely not going to move anything there. Okay. So whenever you get this thing of, your stop hitting and stuff like that, it is just one bank fighting with another. Okay. And we come and talk about institutional players and market makers. Okay. A market maker is somebody that takes your order. Remember, we talked about in the beginning how if I buy an order, okay, and there's a seller, there's always this middleman in the middle, right? Our broker. Okay. Well, guess what? The brokers, the middleman, and these people either buy your shares and hold on to them or sell it. But if you do a market order, you will never have a problem getting out unless it becomes very illiquid. I've only had 2 times in my trading career where even when I did a market order, I wasn't able to get out. And that was whenever market dropped a few months ago when we had those tariff news at the bottom. I had 400 contracts, I couldn't get out because nobody wanted to buy those contracts because people were scared. Okay. But unless you do things like that, if you're trading 10, 20 contracts, even I would say even upwards of 40, 50, you shouldn't have a problem getting out. Okay. But institutional players, right? Institutional players, hedge funds. I keep spelling hedge fund wrong. Okay. Hedge funds control the market. They control everything inside of finance. Okay, this is the number one highest thing of finance. Okay, and then come investment banking and all those other things. Right, private equity, all those things. But hedge funds control the market. Okay, some big players if you want to do research. Okay, my favorite, Citadel. Okay, we have Two Sigma. Okay, and there's a few others that we can kind of name as well. Okay, but these two are absolute giants. Okay, Citadel, for example, their AUM, I believe right now is about 66 billion. Okay, they're controlling 66 billion dollars. And guess what? Citadel has a company called Citadel Securities. Okay, and they are a market maker, which means, okay, which means that they control the market. Okay, Citadel is the trading house, securities is the side. Okay, give me 1 second, I'm just drinking my water. Okay, any questions there about hedge funds and stuff like that?
I think
Okay.
that the number one is Bridgewater. I think they run about like 89 something billion.
I think I could be wrong. I think they have 150 billion, maybe. I think I could be wrong. Once again, I'm just giving you general numbers from last time I checked. But Bridgewater is huge as well. Okay, but just to give you guys a general idea, once again, nobody is taking out your stop losses. Okay, that's a myth. Nobody cares about your $20,000 position that you have in shares. Nobody cares about your $10,000 position you have in options. Okay, none of us are moving the market here, even if we work together as a team, which once again, that is illegal. Okay, that does not exist. Okay, but let's also talk about high frequency trading. Okay, this is something that we participate in. Okay, with one of our companies. But high frequency trading is buying and selling in nanoseconds, not even microseconds, but nanoseconds now. Okay, these are the number one provider to liquidity. So whenever you guys are able to get in and out of your trades, okay, say thanks to high frequency, but also say no thanks because they're kind of stealing your money at the same time. Okay. The way high frequency works is they buy at the bid and they sell at the ask. Okay? They do this over and over and over, and they make maybe one penny per trade. But when you do that a million times a day, okay, there's going to be a hefty profit. Okay? That's how high frequency trading works. Okay? Citadel is the number one high frequency trading firm. Okay? They also equate to, I believe, 80% of all orders, 70 or 80% of all orders routed through every single exchange goes through Citadel. Okay? And this is where we also talk about your brokers, right? Let's take a look at Robinhood real quick. Does somebody know, Milne and Parag, I think you guys know this, so please don't say anything, but does anybody know why Robinhood lets you trade with no commissions? Can somebody tell me? Or just guess. Okay? Why don't I have to pay anything to Robinhood? How are they able to run that huge company? Now they're on the S&P 500. How? Can somebody tell me?
Is it a way to attract more customers, like beginner friendly people?
Good answer, but no. Okay?
They sell data.
Yep. So the way Robinhood makes their money is they sell data. Okay? What do I mean by this? Well, guess what? If you go online and you search up Citadel, okay? Citadel buys data from Robinhood. They pay them hundreds of millions of dollars every year, and they get to see exactly what stocks you are buying and selling. Okay? Just think about how unfair that is. Okay? If I could see everybody's order in the market, what they're buying, what they're selling, and then trade the market with that data. Okay? So if you are not paying for something, you're always the product, right? They say this in finance, they say this in everything, but if you're not paying for something, then you are the product, okay? And this is a great example, okay? I don't know how many of you guys were trading in 2020, 2021, but there was a time when there was this whole thing with AMC and GME, right? GameStop. They wouldn't let people sell the shares because Citadel and other hedge funds needed help getting out of their short positions. Okay? So just take that, food for thought once again. Robinhood, even Thinkorswim does the same thing. Okay? Thinkorswim, Robinhood, the only broker that doesn't do that is Interactive Brokers, and that's why we're trading with them now.
Ultimately, they don't want you to win. That's the
Yeah.
thing, right?
Okay.
So when just to add on when Citadel moves, because they're the market makers, right? When they move, right, you know what they do? They basically when they move the market with more liquidity, they affect the whole volatility, the price as well, right? They also basically affect the spread, you know what I'm saying, as well. So just remember that, like they're the big bosses, right? So
Okay. So yeah. So once again, this game is not made for you to win. Okay? That's the reality of it. Okay? High frequency trading, 80% of the market runs on algorithms. Okay? It's not actually people trading. It is algorithms knowing when to buy and sell. Okay? They use psychology tricks. Okay? I'm sure you guys see the whole engulfing candle thing, right? And you guys think, oh, it's a breakout, we're gonna buy it. How many people do you think follow that pattern? Okay? Your edge, okay, in trading, I want you guys to remember this if you take away anything. Your edge in trading is the number one deciding factor. Okay, it's not how many monitors you have, it's not how much money you have. There's people in this group right now that have $2,500,000 accounts, okay, that aren't making any money. There's other people in this group that have $5,000 accounts that are doubling, quadrupling their money. Okay, you have to have an edge, okay, against these big players. Okay, and just remember that 80% of trading, okay, is done by algorithms, not by people. Okay, not many people are trading and pressing buttons. Okay, it's the algorithms that are taking the trades, and you can either follow them, okay, using order flow and things like that, or you can try to go against them, which is pretty hard. Okay, and then we have the regulatory bodies. Okay, so the SEC or the Securities Exchange. Okay, the SEC is the biggest. Okay, things like insider trading. Insider trading. Okay, they control. Insider trading just means that I'll just use, Satya as an example. Okay, not saying that we do this, but I'll just use Satya as an example. Satya works at Nvidia. Let's say Satya knows how their earnings is going to be. And let's say Satya comes and tells me and I tell the group, or I just take the trade myself. That's called insider trading because that is not information that is available to the public. Okay? Super illegal. You'll be in jail. Don't do it. Okay? The SEC regulates all those things, the PD2 rule, all of those things. Okay? And then FINRA comes in as well, kind of like compliance, and FINRA makes sure things are kind of at house. FINRA is not government. FINRA is third party, just so you all know, but the SEC does use them. Okay? And then CFTC just refers to futures. Okay, so SEC controls equities and options and stocks like that. Futures are by the CFTC. Okay, any questions there? Okay, and then here are a few pain points that we can also talk about. Okay, confusions, right, that you guys have whenever you're placing your orders. Okay, remember, if you're doing a market order, that means you're going to be paying more. Okay, you're always going to end up paying more for execution. Right? Okay. Does anybody have any questions about the bid and ask spread or liquidity? Right? High liquidity means tight spreads, high volume, faster execution. Low liquidity means wider spreads, lower volume, and it's going to make it harder to enter a trade. Okay?
I have one question regarding that liquidity. That's liquidity means the how the people try to buy this contract or share. You referring that liquidity or the company?
So you have the right idea, but liquidity, so whenever we talk about liquidity, right? Whenever, for example, I'll just use a joke. We always make fun of somebody and say, "Hey, you got liquidated." Okay? Liquidated just means that he got taken out of his position. That he was in a position, but now his position turned into cash, right? That's pretty much what liquidity means. But whenever we talk about actual liquidity in the markets, okay, we're talking about high liquidity, low liquidity. If it's high liquid, you can get in and out of the trade really fast. If it's low liquid, it's gonna be very hard for you to get into the trade. Okay? Remember, markets open from 9:30 a.m. Eastern Standard Time to 4 p.m. Okay? You cannot trade options outside of these trading hours. Okay? So yeah, that's it for Bimalai said, so when you use market versus limit orders. The market orders are going to be for market. Okay, market orders are going to be for scalping. Okay, limit orders is for day trading. Okay, so whenever you day trade, you're gonna do limit orders for the most part. Okay, you're either gonna buy at the bid or buy at the ask. Market orders you're gonna do only when you're scalping because you don't want to pay a lot. Okay, sometimes you'll end up taking a trade and you're gonna end up paying a lot more than you should have. You might even be red as soon as you enter. Okay,
Yeah, just to add on to that, right? Sorry, right.
go ahead.
So let's say, for example, like DOCU, right? If you trade a docu, right? If you look at docu has a wide spread, right? So I don't know if you guys noticed that or not. Even docu, Netflix, I think PLTR, any of the tickers that that are not like Max 7, right? So they have higher spread, right? So anytime, as soon as even if you try to buy limit, you won't get filled. So you have no other option but to buy at the market, and as soon as you buy them at the market, you're automatically ready, like I said, right? So what is the point of using the market, right? It's basically what really matters is the speed, right? How fast you want to chase that, and whether it's going up, whether it's down, right? You don't really care about the price. You care about whether you want to capture that move to the up to the upside or downside, right? Because the ticker is moving, right? It's moving so fast, right? So your job, like you just want to chase it, right? That's when you do market orders. All right. So like me today, like I did market orders when I was chasing Nvidia, right? Because I wanted to catch that move to the upside. Okay.
Okay.
Whenever you're doing market orders, you want to have a small sizes, right? You don't want to go in with the big sizes. Like I said, as soon as you enter market, you're automatically going red. So if you have 20 contracts, you'll automatically lose them. You know? So so yeah, it's always best to do limit orders. I always try to do limit orders. You know? That's the best way, right? Like you want to be able to control the price that you want to buy. Understand? Right.
Jalak
So
said, if spread is tied to market, if spread is wide, do limit. Absolutely. That's exactly what you guys should be doing. Spread is tight, you can do a market order because you're not going to be paying a lot more. But if the spread is wide, you always want to do a limit order. 100%, Jalak, thank
mhm.
you. Okay. So yeah, this is Basics Deep Dive. Okay. Any questions you guys have regarding this topic? Okay, no
ओके
questions?
क्वेसन छ ब्रो एक मिनट है त
हजुर।
त्यो तपाईँहरूले चाहिँ रबिनहुडमा चाहिँ के भन्छ डाटा सेल गर्छ भन्नु थियो नि त्यो रबिनहुड डिजाइन मैले त्यो कुरो बुझिनँ त्यहाँनिर कहिले
हजुर। So यस्तो हो So you are not paying for commission, right? So you're trading
हजुर
for free.
हजुर
You are the product, which means that I can reach out to Robinhood and buy data and see exactly all the trades you placed.
ओके
Okay. Now imagine I do that and I know exactly what you're buying and selling. Now imagine not just you, but our whole entire Discord group. Okay. Now imagine every single person that's trading on Robinhood. Just think about how much access to information that I shouldn't have that I do have now. Okay. Now I can take trades depending on where your stops are. Once again, they don't exist, but I'm using this as an example. I can take trades based off of what you're buying and selling, where you're buying and selling. Does that make sense? So you become the product now. Okay. I personally, if you have the patience and the time for it, I would highly recommend switching to interactive brokers or a different broker. Even I found out even Thinkorswim, they sell their orders. Um, so yeah. So yeah.
I mean, that's how they make money, they right? Like
अँ,
I said, so like these firms, the firms they're basically not they're not necessarily selling all the data, like your personal information, but they're selling what you're buying and what you're selling, right? Because like I said, like for example, Citadel, right? The big firm, like they see, like if they know that a lot of the retailers are buying this stock and not Apple stock, what do you think they're gonna do there? Right? So they can come up with a an algorithm or any sort of strategy that will basically where you'll end up losing money, like obviously that's how it is, right? Because a lot of high get it trading high frequency trading or like what do they need, right? What do they need then? They need
अँ,
data, right?
A
That's how
lot,
that's
okay.
how the algos are
lot,
created,
lots of data. Yes.
I see.
right? So they need data. So and what is the best way to get, the data, right?
Oh,
Jenny, like how like I said, there is they use market data, they use I think different algorithm with models, and obviously execution is speed, right? Also, you need a speed, right? Like I said, if you're trading like 20 something million like cons or when they go 1 cent, when they go, they're making almost 20 million. Jenny,
okay.
like,
Oh, okay.
but like they need all this information of retail traders because how do they make money? They make money from us, like retail
I see.
traders,
Okay.
right? That's why Bible earlier he talked about having an edge. And if you have an edge, then you will be successful. You will make money. But you need to have the edge. You need to have a strategy that works for you.
Yep.
Ah,
Understand?
I agree. So
Okay.
yeah, that's kind of market basics for you guys. Okay.
ओके अनि
So
अर्को अर्को
yes.
क्वेसन छ ब्रो फेरि अर्को अघि किरणले त सोध्नु भएको थियो जस्तो लाग्छ तर मैले त्यो अलिकति बुझेन जस्तै हामीले त्यो स्टप अर्डर राख्छौँ नि ब्रदर जस्तै स्टप अर्डर राख्दाखेरि अब आफ्टर द आवर्स त्यसले काम गर्दैन होइन मार्केट आवर्समा मात्रै काम गर्छ होइन स्टप अर्डरले
Yes.
अनि अनि जस्तै मैले चाहिँ फर इक्जाम्पल अहिले एप्पलको स्टप अर्डर चाहिँ अब 220 भन्दा कम गयो भने म त्यो स्टप अर्डर भयो अब त्योभन्दा माथि म जति पनि राख्न सक्छु होइन अनि कहिलेकाहीँ कस्तो हुन्छ भने त्यो 220 चाहिँ नि तपाईँको मार्केट ओपन हुनुभन्दा पहिला नै त्यो घटेर पनि फेरि त्यो मार्केट पछि गयो भने चाहिँ त्यो सेल पनि हुँदैन केही पनि हुँदैन नि कस्तो के भन्छ त्यसलाई चाहिँ नि त्यो मैले बुझाउन सकिनँ
Okay, good to cancel. Okay, so it's on today. Okay,
हजुर
I'll basically chime in with this. So
हजुर
Back in the days, I used to trade XPX. No,
हजुर
XPX one. It was saying when the market opens around 9, like in Sydney, like let's say
हजुर
for example, I can trade XPX around 9 p.m. early, you know, because
हजुर
XPX, I know, like not all the brokers allow it. It's
हजुर
the brokers that I use is IBRK that I used to use, you know. Interactive brokers are when also late at 9 o'clock you can start trading XPX, you know.
हजुर
There is a feature within that broker that allows you to trade XPX after hours. It's okay. Okay. So it's only allowed with XPX. Right? So XPX double trade going on you can have all that orders. So you could buy it like Boliko get a bully expiring on the contracts and you could set, good to cancel or, set the stop or all that stuff. You could do it. But with actual like tickers or any Apple or buy Amazon or buy uh like no, like you can't really trade them because once market closes at 4 o'clock, it's
right
gonna open up tomorrow next morning at 9:30, right? So topic of stop loss depending on where you put it, right? Whether let's say you bought a contract of Apple saying that it's gonna go up, but tomorrow 8:30 there's a news there and Apple drops, and now you have set topic of stop loss exactly at you bought it at 200 and let's say you bought it at 300, you put it for 250 there. I mean, pre-market, no market dumps away all the way. Apple dumps like $3 away, you know?
हजुर हजुर
Topical stop loss, you set it at 250, that's gonna get hit by 9:30. Okay?
त्यो हजुर त्यो केस भएको छ कि मलाई
त्यस्तो
अन्त
सबैलाई भएको छ दाइ मलाई पनि भएको छ from the past experience होइन
हजुर
I would have stop loss and Bolivar market, that's why it's risky.
हजुर
If you're swinging and you're putting a stop loss, and it's very risky, because you don't know if there's a news, and if there's a major news, economic news next day that drops or pushes the market, so it's risky, right? So that's why you buy time, So when you're swinging, you're buying like a month out, right? So that way, but make sure that you don't have a stop loss. If you're swinging a month out, right? It doesn't make no sense you having a stop loss, right? But like, just keep that in mind that topic of a weekly sub when you put a stop loss and next day like market drops, that stop loss is gonna get hit. It's gonna get executed there.
okay thank you bro
Any other additional questions?
But yeah, that's today's class.
Yeah, I have one quick question, Prasant. If we can put the stop loss, we can put the limit as well in the same ticker or same
Yes. So there's
Okay.
a stop order and there's a stop limit order. Stop limit order means that if price goes to a certain point, then it will sell. But if price moves down fast enough, then it will not hit. But if you put a stop order, remember, a stop order acts like a market order once it gets touched.
No, yeah, I understand those things, but we can put the both in the same contract. Like, let's say I only have a Apple one contract and one Apple contract, and I want to do the if price, let's assume the 220, if below the 220, sell it. If goes to the higher than 230, sell it. I can do it like this type of.
Yes, so that's called a OCO order.
Okay, thank you.
That stands for one order cancels another. Okay? Order cancels other. So what that means, what he was saying, in case somebody didn't understand, is let's say that he enters at $100. And let's say he wants to set a stop loss at 95. So this is stop loss. And then he wants to sell it if it goes to 105. He wants to know if you can set this type of order, okay? This is called a OCO order, okay? One cancels the other. Yes, you can set that. We're not going to go too deep into that. I'll show you guys whenever I show you guys how to set up your broker. Okay, so that's it for today. I'm going to give you guys a quick recap of today's trades. I think a lot of you guys were interested, so I'm going to give you a recap for tomorrow. Okay, just so some of you guys can do some of your homework. Okay, we're going to be going over picking a broker. Okay, account requirements. Okay, how much is it going to cost you? Okay, what do you need to trade? Computers, things like that. Okay, and then do you need access to data, which most of you guys will not. Okay, but this is what we're going to be going towards tomorrow. Okay, so just be ready for that. We're gonna have you guys pick your brokers. I'm gonna show you how to set it up, all those things tomorrow. Okay, let's go ahead. I'm going to share my screen and I'm gonna give you guys a recap of today's trading. Once again, I've been going back and all I've been using is support resistance, supply and demand. Nothing fancy. I'm not using order flow. I'm doing very, very simple types of trading. Okay. First thing I'll go over, first thing we traded today was AMD. Okay, give me one sec. Let me try to find my chart. Actually, not even AMD. Let's take a look at Apple. I think a lot of you guys liked Apple's setup today. Okay. Let's take a look at Apple. Let's see if we can do 2 AAPL. Okay. So this was Apple's setup. Oops. Okay, never mind. I'm gonna do it like this. So don't mind my left-hand chart. We're gonna just focus on this right here. Okay. So we ended up taking Apple today for this short play. Okay. First of all, I want you to look at my levels. Okay. We have an inside day. What is an inside day? Okay. An inside day refers to yesterday's high. Okay. So Y day high. And this is our Y day low. Okay. So we have yesterday's low. We have yesterday's high. Price is between there. So we don't make pre-market high and low. But, okay. You know what we can trade? We can trade this right here. Okay. Now, I'm into the algorithm world, and I'll quickly tell you guys what's going on here. Whenever price goes up so perfectly, you guys see how whenever I made this line, you guys see how perfect that line is? How it literally just touches, 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 and then right here touches again, touches again, touches again. Right? Whenever something is going that perfect, okay, I just want you to think humans are sloppy, right? Just follow me here, psychology wise, right? Humans are very sloppy. Whenever no matter how you enter a trade, you're always going to end up entering it in the wrong way. Meaning that if you want to get in lower, you're always going to end up paying more. If you pay more, just that's a whole mess. The only time the market's going to give you perfect structure is if an algorithm is carrying out the trade. Okay, let's take a look at today. First candle, red. Okay, then we come down, lot of wicking. Okay, whenever there's wicking, guess what? We have a supply zone right here. Okay, then we get this initial drop, right? Then we come down, come down, come down, we push up again. Once again, I always tell you guys, there's always a tail before the drop, okay? Because these idiots that bought down here, okay? These idiots that bought down here, guess what? They're regretting and they're going to try to add to their position. Okay, and then market's going to push up one last time in desperation. That's what this is, right? The example I always give is when I don't know if you guys ever seen somebody dying in real life, right? I know it's a graphical thing. I do apologize, but whenever someone is dying, guess what? They take one big breath before they die, right? Same thing with the market. Before these people lose money, they put in their last little hope, and then market drops. It comes below our level. We set our stop above the last 5-minute high, and then we enter puts. Okay, we end up taking this trade. We wanted a 1 to 2, so our first target was honestly just to here. Okay, which was this right here. Ends up hitting our target once again. People try to buy it back up again. These people think a reversal is gonna happen. Then we drop even more. Okay, once again, I didn't catch a big piece of this. I caught a little piece, but that was enough to build a cushion for the rest of the week for me. Okay, just to give you an example. Okay, you don't need a lot in trading. Okay, one of these I know people that trade one candle and they make a bunch of money. Okay, but we're not going under the 5-minute time frame. Okay, we're using the 5-minute for confirmation. We're using the 15-minute to see overall market how it's doing. Okay, that was Apple's trade. Then let's take a look at Nvidia. Okay, Nvidia. This, I think Praveen and Kirandai, a few other people were asking me about this setup and how I was able to get in. Okay, this right here is this is huge, huge, huge buyer's call me. Okay, this is called imbalance. Okay. Okay. This is called imbalance. Why is this called imbalance? Okay. Whenever we're talking about imbalances, okay, if you're trading Forex or you end up trading, futures, you end up calling this a FVG or a fair value gap. Once again, we don't care about those terms. We don't really use those terms. Okay. But this follows the efficiency principle. Okay. The efficiency principles, what it says, okay, is that markets tend to balance out, meaning that if a market goes up really fast, guess what? It's going to come down really fast. Okay. If a market goes up slowly, it's going to come down slowly. Okay. And it also says that a market should be balanced. Okay, meaning that if we're on a seesaw, this person here and this person here should be the same weight. The market should not be going like this. Okay, ever. Okay, when you follow that theory, what we end up getting is the setup that we saw today. Okay, this is imbalance. A lot of people bought this. Guess what? A lot of people didn't get to buy this. Okay, so what ends up happening right here? Okay, once again, you guys don't know this, but this is how algorithms trade. Okay, whenever somebody is adding a big order, okay, this is what the market will tend to look like. It's going to chop around. Okay, and then we got this little move down, and then we got this little pop, and then we ended up shorting the pop. Okay, my whole target, I drew this in the morning. I drew this at what, 10:30, and I honestly thought it was going to break way earlier. I did not expect me to kind of be here till 4 o'clock. Okay, if it was any other day, I would have not caught this setup, honestly, because I usually don't stay past 12 or 1 o'clock trading. Okay, but I was here till 4 at the office, and we ended up catching this trade. So the biggest thing was, once again, we have our key level, which is this support level. We end up breaking that support level, coming down a little. Okay, we end up pushing up a little, and then it ends up dropping really nicely. Okay, our entry candle would be right around there. Okay, but you guys saw this setup today. We're just playing imbalance. Okay, this has been one of the easiest plays for you to get into. Okay, if we take a look, let's see if we can find another imbalance here. Okay, here's another imbalance right here. Okay, you guys see all these buyers coming back up, right? Guess what? We came back down that day, and it acts as a gap, right? You guys remember us always talking about those gaps that we traded, right? And you guys see this right here, how market fell really fast. Guess what? It's gonna get bought up over here. Once price gets over here, it's gonna move really fast through that gap, because there isn't usually gonna be a lot of orders inside of this gap. Okay, same thing here, right? If we follow the market needs to be balanced theory, right? Which is, once again, the efficiency principle. We have this big drop right here. Guess what? Rest of the day, the market acts as a gap. If you look at this gap right here, market fills that gap in, right? Just like this gap right here. The market filtered over here. You guys see how this gap over here got filled over here? That's exactly what we're following. We're just following market, okay? Any questions on the setups? Anyone? Okay, let me see if I can find AMD setup. Okay, this was another trade. Once again, this trade did not work out for us that well. We ended up selling half a break even, and then we ended up selling the rest for a small loss. Okay, our play was there, confirmation was there, this candle right here, everything was perfect, but the trade didn't work out. We cannot be upset that a trade didn't work out. Okay, we know where our stop loss is going to be, we know where our take profit is going to be, right? This is a great thing to happen. Okay, last week we didn't lose any money. Every single trade we took was green. The Friday before that, we were green. Okay. This week we had this red, but then we ended up making our money back on Apple. Okay. Amazing trade. And then Nvidia, which I'm not really going to count because it's end of day. Right. But if you stay consistent and your risk to reward is very consistent and you're not over leveraging, okay, then you guys should be able to make money just using support, resistance, supply, and demand. But the biggest thing, once again, is you need to understand how the market functions. Okay, you need to be able to read, okay, this support gets weaker. Well, it's supposed to get stronger, but if it keeps testing, eventually it's going to break. Okay, if there's an imbalance, it's going to fill. Okay, for tomorrow, the imbalance I would be watching is this right here. Okay, these are not setups that come every day. One thing that I've been doing live on live VC every single day is sitting down with you guys and waiting until 10, 11, 12 o'clock to take a trade. Okay. The reason for that is it's not because there aren't setups, but we're trying to teach you guys to only take high quality setups, right? And you guys see our win rate, right? Our win rate is super, super high. Okay. 70, 80% is pretty good. Okay. 7 out of 10 trades, if we can hit that and your risk reward is a 1 to 2, you can double your account every 2 weeks. Okay. Our risk reward is really good. We're managing our positions really well. And, taking a small loss like we did on AMD, which technically the reason I, count as a loss is it didn't hit our take profit. Okay. Our take profit, our first one was right here, is because it didn't hit our take profit. But guess what? We had our risk managed, right? We're doing 1 to 2, which means hypothetically, if you took every single trade, you would still be up, right? We don't have to be green every single day. We don't have to trade every single day. But when we do trade, we want to take and trade good setups. Okay. And one more thing to show you guys is if we go on Alpha Crunch, this week is showing to be a very volatile week. Now, this uses IV, okay, to predict how much the market is going to move. Today was probably the slowest day. Tomorrow, market is expected to move $11.51. Okay? That's 12 points on ES right here, 12.94. Can somebody tell me how many dollars is SPY supposed to move tomorrow with a 12.94 point? Because we just went over this. Okay, I want to see who paid attention. If ES is expected to move 12.94 points tomorrow, okay, how much is that on SPY? Can somebody tell me? Anyone?
I saw Jay type in the chat 2 points.
So
It's actually 120 points.
so 12.94 would be a dollar and 20 cents. Yes, Parag.
$1.20.
Yes.
Yep.
Yep. Because remember, every 10 points is $1 on SPY. Now, that is not counting carried interest, okay? Carried interest is kind of a funny thing because it fluctuates. But on average, right now, we're expected to move $1.30 tomorrow. Okay, a dollar 20, $1.30. Okay, so this right here, once again, it's called alpha crunching. It shows us, okay, this doesn't show us it's gonna go down. Okay, don't try to predict using the market using this, but we can kind of say, okay, IV is gonna be high tomorrow, it's gonna be low, market's gonna move. Okay, this could be because of news, this could be because of anything, but today and Friday are expected to be the slowest days, which means the next 3 days are gonna be the best days for us to trade, especially Wednesdays and Thursdays, which I'm sure a lot of you guys have started to realize that's when you make most of your money. Right? Mondays, you don't really make much. And remember, Mondays, what we're trying to do is we're trying to build cushion for rest of the week. So, if I make 2,000 today, rest of the week, I have $2,000 now that I can risk and I can either wait for setups, okay, I can hold longer or I can size in more. Okay, but if you keep doing that and you trade on a 1 to 2, 1 to 3 risk reward, your trades are gonna be really good. Okay, there's not a way you're really gonna lose money as long as you stay consistent, you follow your trading rules. Okay, and that's what we're trying to push out right now. Okay. I think that's all for today. Any other questions? Okay. Same time tomorrow, and we're just gonna keep going with this. Okay. Make sure you take notes. If you have any questions, ask them. Meeting will be recorded, and I will have that sent over. Any questions? All right. I'll